Hey everyone, so got a big crypto meeting coming up. Or maybe you're just trying to keep up with all the stablecoin buzz. Well, you've come to the right place. We're doing a deep dive into the world of stablecoins today using these Investopedia articles and even this outline for a crypto podcast you sent. Looks like you've been doing your research. By the time we're done, you'll be able to drop some serious stablecoin knowledge. So let's get right into it. First things first, what exactly are we talking about when we say stablecoin?
Well, at the most basic level, a stablecoin is a type of cryptocurrency. But here's the thing. It's designed to hold a stable value, unlike, say, Bitcoin, which is known for its price swings.
So no more waking up in a cold sweat because your crypto portfolio took a nosedive overnight.
Ideally not. That's kind of the holy grail of stablecoins, right? To provide that stability so they can actually be used for everyday transactions.
Makes sense. Now, I noticed in your research that there are different types of stablecoins, each with its own way of trying to achieve this stability. What are the main categories we're looking at here?
All right, so we can break them down into three main types. We've got fiat-backed stablecoins, crypto-backed stablecoins, and algorithmic stablecoins. Let's start with the fiat-backed stablecoins. Those are usually the easiest to wrap your head around.
Sounds good to me.
Mm,
Fiat-backed. Those are the ones that are pegged to traditional currencies like the US dollar, right?
exactly. Think of it like this. For every stablecoin out there in the digital world, there's an equivalent amount of fiat currency, like US dollars, held in reserve, just kind of backing it up.
Oh, okay. So it's like having a safety net of actual dollars.
Exactly. That's a great way to put it. And when it comes to fiat-backed stablecoins, Tether and USD Coin or USDC are the big players.
Yeah, those are the ones I kept seeing in the articles.
Right. Both are pegged to the US dollar and they're used for all sorts of things. Trading, making payments, even just as a relatively safe haven within the often wild world of crypto.
Okay, so fiat-backed. That's pretty straightforward. But then there are the crypto-backed stablecoins. They're backed by other cryptocurrencies, which seems a bit counterintuitive since crypto is known for being, well, not so stable.
Yeah, you'd think so, right? That's actually a really good question. The way crypto-backed stablecoins work is they use this concept called over-collateralization.
Over-collateralized. Is that like when you put up something worth way more than what you're borrowing to secure a loan?
You got it. Like, imagine taking out a loan, but you have to put up collateral that's worth double or even triple the loan amount.
Okay, I'm starting to see where you're going with this.
Right. So even if the value of that backing cryptocurrency drops, there's still more than enough to cover the stablecoin's peg. That's that link to the US dollar.
So even if the backing crypto takes a tumble, the stablecoin is still good.
You've got it. A good example of this is MakerDAO's DAI stablecoin. It's pegged to the US dollar, just like Tether and USDC, but it's actually backed by Ethereum and a bunch of other cryptos. And the total value of those backing cryptocurrencies, way higher than the total DAI in circulation.
Okay, so we've got fiat backed with like actual dollars backing them up, and then crypto backed with that extra collateral to keep them steady. But then there's this whole other category, right? Algorithmic stablecoins.
Whoa.
Those seem like the real wild cards in the stablecoin world.
Yeah, they definitely get people talking, that's for sure. Algorithmic stablecoins are interesting because they don't rely on any reserves at all, not fiat currency and not even other cryptocurrency.
So no safety net of dollars or a pile of crypto. How on earth do they stay stable then? It sounds like they're just floating out there with nothing to hold them up.
You could say it's all in the name, right? Algorithms. They use these super complex computer programs to manage the supply of the stablecoin, and by managing the supply, they can keep the price stable, or at least that's the goal.
So it's kind of like those self-driving cars, right? They're constantly adjusting based on all the data they're taking in to stay on track.
Yeah, that's a really good analogy. But instead of steering wheels and brakes, these algorithms are using lines of code and market data to stay on course.
Fascinating. But our research mentioned that even these complex algorithms aren't foolproof. And then there was that whole situation with Terra USD collapsing, which definitely made things a little uneasy in the crypto world.
Right, the Terra Z situation definitely showed everyone that even with these really smart algorithms, things can still go wrong. It's a good reminder that this is all still pretty new technology, and we're all still figuring it out as we go.
Definitely something to keep in mind. So we've talked about the different ways stablecoins try to keep their value stable. But why should anyone even care? What are the big things these stablecoins could change?
Well, stablecoins could revolutionize a lot more than just cryptocurrency. This could change how we send money internationally, how we think about and interact with decentralized finance.
Cross-border payments, that's just sending money to different countries, right?
Exactly. Think about it. It's a huge market, and it's full of slow transactions and even bigger fees. Stablecoins could be the key to streamlining all of that. They could make sending money internationally faster, cheaper, and more accessible, especially for families who rely on things like remittances.
So no more waiting days for a wire transfer to go through or losing money to those ridiculous fees. That would be huge, especially for families who depend on sending money across borders.
Absolutely. And then there's the whole world of decentralized finance, or DeFi for short.
DeFi always sounds a bit like something out of a sci-fi movie. How do stablecoins play into that?
You could think of stablecoins as like one of the foundational blocks of DeFi. Basically, DeFi is trying to recreate all the traditional financial services, but without things like banks.
Okay, so things like lending, borrowing, earning interest, but it's all happening on a blockchain instead of through a traditional bank.
You got it. And stablecoins are essential for making these DeFi applications work. Like they can be used as collateral for loans or to make trading on these decentralized exchanges possible.
So it's kind of like they're taking that stability and predictability that stablecoins offer and bringing it into these new decentralized financial systems.
Exactly. And it lets more people participate in those systems without being exposed to the volatility of traditional cryptocurrencies.
It sounds like stablecoins could open a lot of doors in finance. But we also saw in the research that there are some concerns, especially from regulators,
Right, it's not all perfect. Regulators are definitely watching stablecoins very closely.
which makes sense considering how big of an impact they could have.
Absolutely. There are valid concerns about financial stability, transparency, and whether those reserves backing some stablecoins are really as strong as they're claimed to be. The International Organization of Securities Commissions, IOSCO, has actually called for stricter regulations around stablecoins.
So it's like everyone's walking a tightrope here, trying to encourage this innovation, but also making sure everything's stable and that people are protected.
Exactly. And how this all plays out is going to be crucial for the future of stablecoins.
It's like stablecoins are trying to find their place in the world, right? Balancing innovation with regulation, safety,
It's a balancing act for sure, and a high-stakes one at that.
definitely. And speaking of high stakes, our research mentioned central bank digital currencies, or CBDCs for short. How do those fit into all of this? They seem to be popping up more and more in these conversations about the future of money.
Think of CBDCs as the official version of stablecoins, like the ones being developed by central banks around the world. They're digital currencies too, and they're also designed to maintain a stable value. But the big difference is they're issued and backed by governments, not independent companies.
So it's like traditional financial institutions are saying, hey, we can do digital currencies too, and ours are government approved.
That's one way to look at it. But it's interesting, right? Even central banks are recognizing the potential of digital currencies. It just goes to show how much this is shaking things up, and stablecoins are right at the heart of it all.
It's like everyone's trying to figure out what the future of money looks like, and stablecoins are leading the charge.
Absolutely. We're talking about potentially changing how we interact with money on a global scale, how we think about it, how we use it.
It's a lot to take in. So for someone who's been following along on this deep dive with us, what's the key takeaway? What should they be thinking about as they see stablecoins in the news?
I'd say the biggest takeaway is that stablecoins are a sign of a fundamental shift. They give us a glimpse into a future where our financial systems are more open, more efficient, more accessible, and hopefully more inclusive, especially for those who haven't always had equal access to financial services.
And whether or not stablecoins become the dominant form of digital currency, their impact on the future of finance is undeniable. Well, there you have it. We've explored the different types of stablecoins, their potential benefits, the challenges they face. It's clear that stablecoins are more than just a passing trend. They're sparking a global conversation about the future of money. And as with any new technology, there will be bumps along the way, but one thing's for sure. This conversation about stablecoins and their role in shaping the future of finance is far from over.